And I think now silver is very undervalued, and we have a massive shortage of silver also there. You remember that all the gold that's ever been produced in history still exists today in one form or another, whilst most of the silver that has been produced has been consumed. And therefore, there are no major silver stocks anywhere. And now the industrial use of silver has increased dramatically and will continue to increase. I mean, in all electrical products there are silver. And of course, now we have also the massive demand for solar panels, which is going to explode. So there will be big, big demand for silver. And therefore, the price is going to go up again by multiples of silver, regardless of gold.
As global economies shift towards more sustainable and technologically advanced industries, silver is emerging as a critical component in various sectors. This versatile precious metal is experiencing a surge in demand, driven primarily by the rapid growth of electric vehicles, solar energy installations, and other cutting-edge technologies. Industrial demand for silver has been reaching new heights, propelled by its increasing use in photovoltaic cells, 5G technology, and automotive electronics. The China Photovoltaic Industry Association reports that Chinese solar manufacturers are adopting new technologies at an accelerating pace, which analysts suggest will have significant implications for silver usage. Photovoltaic installations have far exceeded initial forecasts for 2023, with projections indicating another record-breaking year for new capacity additions in 2024. Egon von Greyerz, a renowned precious metals expert and founder of Matterhorn Asset Management AG, anticipates a significant rise in silver prices. He points to a growing silver shortage, as much of the historically produced silver, unlike gold, has been consumed by industry. Von Greyerz believes this supply constraint, combined with increasing industrial demand, will drive silver prices higher in the future. Bank of America projects silver prices to reach $35 per ounce by 2026, a substantial increase from its current spot price of $28.40. Silver has appreciated by almost 20% year-to-date, keeping pace with gold's gains. Many experts believe silver is poised to outperform gold in the coming years, given its sensitivity to manufacturing activity and the expected uptick in global industrial production. Von Greyerz doubts a U.S.-led global financial reset, citing America's economic weaknesses. He believes China and Russia likely have larger gold reserves and more influence on future monetary policies. Recent data shows China's central bank slowed gold purchases in Q2 2024, but its total gold reserves reached 2,264 tons, now 5% of its total reserves, the highest since 1996. Please tune in for our exploration of Egon von Greyerz' expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Silver has throughout history been real money also. It hasn't always been gold. It's been, in Rome, for example, then you had the denarius, and of course, but the money printing that took place in the Roman Empire or in Rome wasn't to just issue more silver denarius. It was actually that silver denarius up until about 170 AD. It had basically 100% silver content, and by 280 to 90 AD, it had zero silver content for a while. So that's how they devalued money in those days. But silver, first of all, when you said a reset, I don't think there will be an organized reset. I don't believe in any reset. It's not going to work because they might try it. But the US might try it. But who's going to listen to the US? It's a bankrupt nation. No one's going to follow whatever the US says. People are going to say, show us your gold. We revalue our dollar now based on our gold holdings of 8,000 tons. How do you show us the gold? Have you got the 8,000 tons? Hasn't been a physical audit of the U.S. gold since Eisenhower's days. So we don't know if the U.S. has gold. More likely that China will have its gold because it continues to buy, and China keeps its own production. The government keeps that, which is about 300-something tons a year, and they import a lot. Same with Russia. They're more likely to have gold than the U.S. So I don't think there'll be a reset of some kind. But coming back to silver, From the beginning, we told people gold is a king of the metals. That is a real wealth preservation metal, and that's what you should hold. Now, and because silver is not for widows and orphans, and it's incredibly volatile, and it's wonderful when it goes up because it goes up twice as fast as gold at least. But when it corrects, it goes down also twice as fast or even more. And therefore, it's not for normal people. But having said that, so our clients maybe have had nothing, no silver, or maybe maximum, we told them not more than 20%. But now, and that's been right. The way silver went from a few dollars in 1980 or 1971 up to $20, and then down to $8 again, and then up to 50, and then down again to low teens, and so incredible volatility. Now I think the gold silver ratio is now 80, 85, and I think now silver is very undervalued, and we have a massive shortage of silver also there. You remember that all the gold that's ever been produced in history still exists today in one form or another, whilst most of the silver that has been produced has been consumed. And therefore there are no major silver stocks anywhere. And now the industrial use of silver has increased dramatically, and will continue to increase. I mean, in all electrical products there are silver, and of course now we have also the massive demand for solar panels, which is going to explode. So there will be big demand for silver, and therefore the price is going to go up again by multiples, and so regardless of gold.
On Monday, the gold price lost traction despite a softer greenback. Markets are still digesting the Federal Open Market Committee's dovish stance and the softer U.S. employment report. The U.S. Treasury bond yields and the U.S. dollar will likely remain under pressure, serving as a tailwind for the yellow metal. Additionally, rising geopolitical tensions in the Middle East may continue to underpin traditional safe haven assets like gold. Greyerz notes that gold typically only reacts to geopolitical events in the short term. Monetary policies and the money supply influence long-term price trends. He is not overly concerned about short-term events like Fed decisions or isolated geopolitical incidents. Gold traders will closely watch the U.S. ISM Services Purchasing Managers Index on Monday for fresh catalysts. The service's PMI is estimated to improve to 51 in July from 48.8 in June. If the data comes in stronger than expected, it could lift the USD price and cap the upside potential for gold. Let's get back to the interview.
What really determines the gold price in the long run is the money supply, the amount of the money, the destruction of paper money. Remember, we've decided, or we've chosen, or the world has chosen to value all assets in dollars or other currencies, which is really ridiculous because everything looks better than it is. What you're worth, or your shares, or your gold, whatever it is, or your house, in a currency that goes down by the day, whether it's the dollar, the pound, the yen, the euro, something that with a more stable value. So we're kidding ourselves by valuing it in a currency that is going down constantly. So coming back, well, the geopolitical, so as I said, gold does only react short term to geopolitical events if we don't have a nuclear war, but then we don't have to worry anyway because we won't be there, most probably. But otherwise, gold only has short term reaction to geopolitical events. But as I said, it's the money supply that really determines where gold is going. So, that's why I don't really care at all about what the Fed is going to do tonight, or if it's going to be another bomb in the Middle East, because, as I said, it's the consequences of that action. The consequences will be, it will lead to more money printing. The war is costing an absolute fortune. The US now sending 100 million, they're 100 or billions and billions. Well, I don't know what they sent to America so far, 200 billion, or to Ukraine, a few hundred billion, etc., or more. And nobody asks where's the money coming from. Well, there is no money. It isn't coming from anywhere. It's coming from just from the air. They pluck it out of the air and call it money. It's just printed money coming from a computer. And of course, with Ukraine, it's even worse because a lot of that money never goes to neither the weapons nor the people. It goes to corruption to a great extent. So geopolitically, there's a war between the US and Russia, in my view, and the Ukraine is just an excuse. I know that a lot of people in the world agree with the propaganda that it's the Ukraine which is really the country that should be helped. So that's not the US have no interest in Ukraine except for as a weapon against Russia. And that war is unlikely to stop. Russia is never going to lose against Ukraine, however many weapons the US sends, in my view. Even if NATO starts walking into Ukraine. Remember, Russia has got some very strong friends. They've got China, they've got Korea, they got Iran. So Russia is unlikely to lose a war, even if it escalates. And everybody knows that if it escalates, it gets out of control, and you are not far from nuclear weapons. So,
as the global economy continues to evolve, silver's dual role as a precious metal and an industrial commodity places it in a unique position. With increasing demand from renewable energy sectors and advanced technologies, coupled with supply constraints, silver may shine brighter in the coming years, offering potential opportunities for investors and industries alike. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.